Hello, everybody. I hope you're having a great weekend so far. Going ahead and reviewing the past week of action for the market, it basically wasn't good. Now, Friday we saw the NASDAQ and the Russell 2000, the other indexes, kind of rally pretty well off their intraday lows, as you can see as I cycle through all of the index charts. But if you really think that we've hammered out a bottom, hence hammer, kind of like Thor's hammer looking chart pattern here. Um, Couple things. Where's the volume for the capitulatory? Okay, definitely this volume indicates that we got a washout. It just wasn't there. You can see volume was below average on the Dow Jones Industrial Average, on the S&P 500, same situation, and on the Nasdaq, even though it was above average, it was lower than the day before. So you definitely don't have capitulation volume there. And then, and the most interesting thing, look at the VIX. The VIX on this most recent pullback is actually lower than where it was on the last pullback. And that last pullback is even lower than where we were during the last pullback. So look at the Russell 2000. 3 consecutive lower highs. And that means that we should have 3 consecutive higher highs in the VIX. Yet we have 3 consecutive lower highs. So it's very interesting to see the Russell 2000 put in lower highs and to see the VIX put in lower highs, and that's basically because these indexes are being held up by the S&P 500 and Dow Jones Industrial Average, but they also look sick. The Dow Jones Industrial Average also has lower highs here, here, and here. So it's kind of amazing that the crowd is becoming more complacent as we weaken. So not only do we have a complacent crowd or weakening market, but breadth is absolutely horrible. So if you think that we bottom following Friday's action, the verdict's still out. Also, here's another key that we probably didn't. MACD, do you see that into oversold levels back here to indicate that we definitely have momentum to bounce higher? Nope. Look at the stochastics. That's my main indicator, my 20-10-10 daily stochastics. Does that look oversold to you? Not at all. Russell 2000? Yeah, it's oversold, but do you see like any divergence whatsoever and any real price momentum higher? Of course not. And that can also be said in the MACD. There's no divergence yet to indicate that yes, stocks want to bounce. And then the S&P 500, just to look at that one last time, nowhere near oversold here. TSV going down, but nowhere near oversold. And stochastics nowhere near oversold. Same with the Dow Jones Industrial Average. And the index that was leading us to the downside, that was flashing the big warning that we were in problem mode, is still in a clear downtrend, still under a sell signal, and is now back below its 50-day moving average, which is still trending lower overall. So we don't have the conditions necessary to start looking for a potential bottom. Now, that being said, I had a ton of sell stops trigger on Thursday and Friday. I mean, a ton. Costly commissions. I think I spent almost $40 to $50 in commissions this week with all the sell stops triggering, which is a lot on my end. A lot, but really that's only like 5 trades at E-Trade, so it's really not that bad. But overall, when that kind of action with the market doing what it's doing, that's a clear sign that we've got problems. And UVV, my final sell stop, thank God for sell stops, was below 53.89. This thing crashed right below 53.89 to finish at 50.25. This is a 100% sell signal on the end-of-day basis. Further 50% sell signals is IMS, closing below the 50-day moving average and above average volume. You can now raise your final sell stop to 30.02, 30.01. I would not hold the stock if it goes below that. And CYNO, I've already been knocked out of it thanks to this day, but it's a 50% end-of-day sell with it closing below the 50-day moving average. These big moves is what we see during earnings season, but that combined with a bad market, you're going to get some ugly moves. And then SUPN, also with it closing below the 50-day moving average, that's a 50% sell. You can move your stop up to 1687. I have half my stop now at 1687 and the other half at this low a day, 1561, and I'll be able to exit that position with gains because we're long from back here in May. But chart doesn't look good, and if it would be like another heavy volume move below 50-day moving average, my final sell stop will be moved up to the next low a day that we see print if it continues to slide below the 50-day moving average. Now, what looks good out there? There are some stocks that caught my eye. ABTL, it looks good, gapping up, but you want to see it hold like CTSH. which is holding its gap up, so that's good to see. Denny's is holding its gap up. That's good to see. Nice is holding its gap up. That's good to see. So we still have some good stocks out there. eBay is consolidating and looks ready to go. Always a defensive stock, but as you can see, some nice accumulation on that right side. USNA is so far holding its gap up. We'll see how that continues. CO, similar situation. See how that goes. CCRN, beautiful stock chart, short term, a lot of accumulation the past 3 days despite a weak market. We'll continue to watch that one. CCRN and CO are both, health related. SCMP also breaking out. But ABTL, that's probably like one of the nicer ones. But NICE is canceling and Perfect Speculator scan quality, but BOP is going in the wrong direction, which just continues to show that I don't have a lot of good charts. I mean, all those charts I just showed you, they're good, but none of them are beautiful. I mean, even Denny's BOP is going the wrong way. So in all of these, we're seeing the wrong thing. USNA, BOP going the wrong way. What about ABTL? I really didn't look. ABTL, no, BOP looks good, surging there. CCRN, right way. CO, right way. So, there are some good out there, but utilities are really starting to, pique my interest. Look at this nice long round base in PCG. Our new long TSO worked right away on Friday, so the oil, gas, and refining and marketing stocks look good. But basically, on Friday, it was just utilities. This is the Vanguard Utilities ETF, back-to-back pocket pivot point buy signals, and then XLU, back-to-back pocket pivot point buy signals, with PCG looking good. So you can kind of see where we're rotating into. Whoops. XLU and XL. No, not really XLE. Let's just go ahead and stick with these refining stocks. TSO. I don't know what the rest of them are. Let's actually do this really quick. See how the rest, sub-industry components, see how they good. Yeah, that's right. HFC, ALJ. Those are the two big ones. But as you can see with the rest of them, that's TSO again. Oh, there's a good one. VLO probably. Yep, VLO. Yeah, so there's still some good chart patterns out there in this one. It's not great, but you can see that there were a few leaders. PBF also holding up. So overall, it looks like that we're rotating into defensive industries whenever I see chart patterns that look like this. So I recommend just to, be careful out there. Don't do anything crazy. Cash is king. This is August and September, the 2 weakest months for the stock market going back to 1950, the third and first weakest months going back for the stock market to 1929. Don't fight seasonality trends right now, especially with price confirming that action. It does not look like we have a bottom here, but who knows? We could have a tradable bounce. My longs will take it. I remain hedged in BIS, which had a nice gain at one point intraday. Sadly, that is erased. Don't like to see that, but also still hedged in SRTY and TECS. And even though on an end-of-day basis we're still tracking at DRV, I'm completely out of it, but it's still there if you're still long it on an end-of-day basis.